Hey guys, Adam Rose, Vice President and Senior Loan Officer for Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guy Podcast, and today we're going to talk about a CFPB announcement that's going to impact all home buyers, not all, but most home buyers out there, in regards to getting you approved for your home loan. All right, so the CFPB a couple years ago announced that they were going to limit the impact of medical collection debt on people's credit reports. So anything, Experian, TransUnion, Equifax back in April of 23, anything less than $500 on a balance, they simply would not allow to report to the bureaus. And there was a time frame, I think it was like 6 months or something like that, and if it wasn't paid, then they could start reporting. Some weird rules that I don't really recall because I still see stuff on there all the time. But the good news is CFPB came out and announced, it was yesterday morning, I think it was, that medical collections are no longer going to be reporting on the credit report for lenders to see. So when people pull credit, there's a different code depending on what industry you were in. You know, consumer credit, auto, whatever, credit card debts, unsecured, whatever it might be. And with those codes, we'll allow certain things to pop on and other things that we will want to see, right? So like we have liens and judgments reports that we'd like to see on the credit report, so we can add those in there. So there's a lot of different layers of things that you can do with the credit bureaus, depending on the industry that you are in and what's relevant to what you have to do to get your job done. So for us, it's going to completely eliminate medical debt all the way around, all right? So, you know, people run into this a lot. It's very common to see medical collections on someone's credit report. Even somebody that has a 740, 780 credit score, I've seen medical collection debts. Happens all the time. It doesn't matter if you have insurance, right? You got deductibles to cover and co-pays to cover, and you know you have policy limitations in regards to the insurance pays so much, and then the doctors or the hospitals or whatever you have done try to bill you for the excess, and it's a complete nightmare. It really is. I mean, anybody that's been to the hospital, you know, 2 weeks later, you get something in the mail that says, this is not a bill. Okay, not real sure what it is. More of just like a summary of what happened, a summary of your coverages, what's paid, what's not. Still shows a balance, but they always say this is not a bill. And you get 17 different things. People that have kids, my God, just forget about it. It's unbelievable. The process of paying those bills and the amount of bills that you get for, you know, anesthesiology, you got the doctor, you got the delivery room, you've got the pediatrician that comes in that's not associated with the delivery, you've got all this craziness happening. And so no one knows what's what, and that's why medical collections are such a common thing. You know, we have people trying to explain the medical collection debt, and they're like, hell, I don't know what the hell that's from. That was from 5 years ago. But they can't anymore. So in January of 2025, the CFPB approved a new regulation that prevents nearly all medical debt from appearing on credit reports, no matter the amount. No matter the amount. And according to the CFPB, the rule change removes exceptions that let lenders use information about medical debt to make determinations about someone's creditworthiness, prohibits credit reporting agencies from including medical debt on the credit report sent to creditors if the creditor is prohibited from considering it, and bars, which I thought this was interesting, bars lenders from using medical devices like wheelchairs and prosthetic limbs as collateral for loans or from repossessing them if someone can't repay the loan. Anybody that's watching this, we don't do that. So I don't know if it's like a buy here, pay here stuff. You walk in, you want to buy that car, and they're like, well, your credit's not very good, but I really like that glass eyeball you got there. You put that up as collateral, you got yourself a deal. Never even seen that before. Never heard of it. But hey, apparently it happens, okay? Because apparently people are showing up to people's doors and, or creditors are showing up to people's doors and taking people's prosthetic limbs. I know I'm laughing a little bit, but that's probably the most absurd thing I've seen. It's kind of like that movie that had Jude Law in it. What was that? Repo Men, right? You ever seen that? Check it out. It's pretty crazy. But this is going to go into effect 60 days from publication. So basically, in March, we're rocking, right? Hopefully, we're going to see a big jump in people's credit scores that might have had medical collection debt. Again, it's not a massive impact on scoring, but nonetheless, it's something that we can just rule out because as a lender, me personally, I do not care if you have medical collection debt, but there are certain programs that do. Okay, so like USDA, for example, if you have more than $2,000 in medical collection debt, now we have to count some sort of payment against that debt to account for it. FHA, don't care one bit. Okay, but the impact on the scores alone could push you from one product to the next, right? Conventional, maybe you're out of conventional because of these medical collections, because of scoring, or what have you. So I think that's huge. It's going to change the game quite a bit. So, and it's just in time because we've got tax season right around the corner. And as I've talked about before, make sure when you do get a tax return, if you get a tax return, that you are saving that money, putting it aside, using that for the down payment, using that for your own closing costs, paying down or off debt, freeing up some disposable income to help you qualify for more house. This is all going to coincide right at the same time. And so that's fantastic news for buyers in 2025. I mean, that's only going to help them. So good stuff. I mean, usually when we're talking about the CFPB, it's like, ugh, because there are some lawsuits going out there. I'm not going to talk about that today. I'm not a huge fan of bashing a bunch of other lenders, but if I get the chance, I might. So we'll talk about that, but it's usually all negative that comes out from the CFPB and what people are doing wrong. And this is a fantastic move that they've made, and I applaud them for that. So hopefully that information was helpful, guys. Remember, it's tax season. Hang on to that money. And in March, we might see some bumps in credit scores. So if you felt like you were just drowning in medical debt and concerned about applying for a mortgage, it should subside. All right. So make sure you subscribe on YouTube. Check us out on Apple Podcasts. Check us out on Spotify as well. We'll catch you all next week.